Good day everyone. Today is going to be another video about learning to invest in the stock market, and today what we're going to be talking about is the top 5 easiest stock market strategies for beginners. If you're just starting the stock market, this is the right video for you. So let's start. Right, the strategy number 1 that I'm going to be sharing to you is called cost averaging. What is cost averaging, right? Cost averaging is a good strategy for long-term investing, meaning you will not be needing your gains, your money anytime soon. You're looking forward to 5 to 10 years from now. That is what this strategy is for. Cost averaging is just invest a fixed amount of money every period over time. Meaning, if you have 5,000 this month, you buy that stock. You buy the stock that you want. Let's say, for example, Jollibee, and then next month you have another 5,000 to spare. You can buy the same stock, and the next following month you buy the same stock again. This is good for beginners who can only allocate a small amount of monthly to put in the market and has little to no time monitoring the market. Right? So you might ask me, what if I buy the stock this month and it's expensive, and I buy the stock next month, it's cheap, but the next month it's expensive, right? So that can be a cause of concern, but you don't have to worry about that with this strategy. So here's the cost averaging strategy that we mentioned. You have 5,000 pesos worth of stock. You buy ABC at the market price month 2, the same thing, and month 3 at the same thing. The black lines right here is called the market movement. So that's the prices going up and going down, and going up and going down. On month 1, you might be able to buy the stock prices at a very cheap price. On month 2, you might buy it at an expensive price. On month 3, at a cheap price. Month 4, an expensive price. You don't have to worry about that, because what this does is, since there are months that you will be able to buy the stocks at a cheaper price, you will be getting more shares and at a better price. Right? There's this thing that we call an average. So that is basically the average of all the stocks that you bought from month 1, month 2, and month 3. Basically, if you do this strategy, everything's gonna average out, and if the stock is just overall going up, your average will also go up, and your investments will go up with it. This is the reason why your VULs, the insurance that you buy from companies now, VULs are very successful. The VULs apply the cost averaging strategy. Right? Whenever you pay a premium for your insurance, the insurance company just buy those stocks that they have in the fund whenever you pay. So for next month, once they receive your money, they buy the stocks again and again and again. What this does is just basically put you on the average. Sometimes you buy it at an expensive price, sometimes you buy it on a cheaper price, but your average goes up with it. And overall, as long as the fund goes up, your investments go up also. That's why VULs are successful. Right? So this is the strategy that is behind VULs. The next strategy I'm going to share to you is called position trading. This is my favorite strategy when I do my trading, especially for newbies. This is very easy to understand. Right? Position trading is good for mid to long-term investments. Right? Timing an asset after it went down. Remember, this year stocks went down because of the pandemic. When the position starts to stabilize after going down, that is when you start buying the asset. Right? Things to know: fundamentals of a company. Basically, this is how good the company is. If the company is good, that means the company is fundamentally good. Right? I have a separate video about learning how to know the fundamentals of a company. Please go to the video description, right? So that you will know more about it. Supports, you need to know what supports are and RSI divergences are. Alright, I'm gonna run through them in this video so that you will understand the discussion, but I have a completely separate video for you to understand them even more. Check out the video description. This is best for beginners who can watch the market regularly and have fair amount of capital to spare. If you are trading, you will need pretty hefty amount. Not you will need what do you call this? You will need a fair amount of money to trade, since if you're gonna be trading small amounts, the gains are gonna be very small also. Right, so supports, this is one of the things that you need to understand for this strategy. Supports is the level where stock prices rally or go up whenever it is hit. The market thinks that the price is the cheapest as of the moment, so buying usually starts there. And I am talking about price action in the charts, right? So if you're trading, you will be looking at charts, and this is what you usually are gonna see. So a support is this bar right here. It's an area where buying usually starts. If you see the price action at this level right here, this is where this rally started. Okay, but during this point, we don't really know for sure if it was gonna go up already, right? So if you missed buying the stock here, it went up. After going up, it's a normal cycle. Prices tend to go down. Now, after it goes down, right here, right? This is historically, this is where the prices started to go up. So historically speaking, this area is considered cheap by the market. And if you buy it here, you would have won this trade right here. And the market dropped again, and this area is hit again, and this is where the buying usually starts, and that is where you basically position your trade, and that would have been a win already. So that's what a support is. Again, it's an area where prices start to go up because the market sees that it is cheap there. Now here is RSI divergence. This is quite technical already, so please again check the video description for a full video about RSI divergence. What we're going to be focusing now is this bullish patterns right here. The blue arrows means it's the price action. The red arrow is your RSI. I'll show you how it looks like later on, but basically this is the movement of the RSI on the technical analysis platform. So let's move forward. So here is a good example of position trading, right? Number one rule is look for a fundamentally good company. I am looking at Macro Asia right now. I'm not sure if you can see it, but this is Macro Asia, a good company here in the Philippines. During the pandemic, it went down, right? So after this downtrend right here, which is our first condition for position trading, we look for it to try to stabilize. And here's the stabilization right here, another stabilization action here before it starting to rally up again. Okay, and let's look at this stabilization further. So here is your supports right here. So prices, when it hits the area, it starts to bounce, and another area right here where whenever it's hit, it starts to go up. Okay, so we have the second condition, which is our supports. And with RSI, look at this right here. Look at the price action, right? The bottoms of our price action is going down. This one is higher than this one. This is a lower bottom compared to this bottom right here. So prices are going down in this area, but look at RSI. RSI's bottoms are going up. Going back to our pattern, this is what we are seeing right here, the first bullish pattern, right? So stabilization, prices are going down. Look at the bottoms of our prices, it's going down, but RSI's bottom is going up. That's a signal to buy, and that is this one right here. So that's our buy area, and that's where we start our positions. Okay, you could position it here. That's okay, since RSIs are still looking good at this area right here, but this is a stronger signal for us to start buying right here. It happened again here This is a different pattern for RSI divergence, but look at this right here. This is a support area. Prices, the bottom of the prices are going up, but RSI is leaning down, right? This is going downwards right here. Going back to our patterns, this is what we are seeing. Prices, the bottoms of the prices are going up, but the bottoms of RSI are going down. That's a bullish signal. That is a signal for us to start our position and buy the stock. And if you bought it at around that area right here, right, the price during this time is around 4 pesos. The current price is almost 9 pesos. So that's basically double your investment already. The technical analysis that we are discussing is not a guarantee, right? It doesn't mean that if you see these things, it's 100% that it goes up. No, but we have this study to basically increase our odds and lower the risks in investing. That's why we do technical analysis. But these are the things that you need to know to learn position trading. Okay, so the next strategy I am going to teach you, right? The strategy for beginners is copy trading, right? Copy trading. This is what I'm doing right now since I'm busy with my businesses. So I'm just doing copy trading for the meantime while I'm not looking at the market. Basically, it's like this, right? So you're looking at people who teach stock market online. Sometimes you might ask yourself, why not just this person just handle my funds instead? I'll give you the money and then you trade it for me. We can share whatever earnings we get, diba? That's an easier way to do investing. Basically, that's what the rich people do, right? Rich people find fund managers, right? They find these fund managers will be handling the money of the person, and then once it grows and the rich person thinks that it's already time for me to take my money, I'll just give you a fee for handling my funds. That's what the rich people do. Before, this is not available for the average investors like us, but now it is available, and I want to share this to you. There is a way for us to look for a person and just copy whatever trade he does. Whatever he earns onwards, that is what I'm going to be earning also, right? So it's very good. So copy trading enables individuals in the financial markets to automatically copy positions opened and managed by other selected individuals. This is best for those who do not have the time and knowledge in trading in the market but have the capital, maybe small or average, to invest, right? So this is very good for you. Okay, so before I go to copy trading advantages, let me just share to you my screen. So this is my portfolio. Basically, this is my account, and I'm keeping this public to everyone for educational purposes. So right now, if you look at my portfolio right here, you won't see stocks. What you see are people. These are people that I am copying. Basically, these are the people who manages my funds. These are my fund managers, J Nemesis and Olivier Danville. So Olivier Danville and J Nemesis, I've been copying them for a month, and this is what I gained already. For J Nemesis, I gained 9.47. So this wasn't a guarantee. I didn't know he's gonna earn 9.47 this month. Olivier Danville for already a month, I only earned 0.48%, so that's low. So there's no guarantee if you will be earning big or not. Okay, but then again, I am not doing anything. These peoples are doing the trade for me, and thanks to J Nemesis, I have already earned $94 with the $1,000 that I invested in him, just through copy trading. I didn't have to look at the stocks, the stock market. I didn't have to look at the stocks that he wants to buy. He just handles the trade for me, and I just leave my money with him and let it grow through J Nemesis. So that's how nice copy trading is. Not just these two. If you go to copy people, you're gonna see a filter for people you can copy, right? And then here's editor's choice. So these are recommended by eToro for you to copy. Usually they recommend people who are doing well in copy trading already and has very low risks. There are more filters right here. I can go for medium risk score, meaning they have higher risk but higher rewards. Like this guy right here, Vido earned 95.85% the last 12 months. That's a lot, right? But if you're a low risk kind of person, so here are low risk investors. This guy is had Maxim SR. He earned 40% the last 12 months. So you can copy him instead. So it really depends, up to you. What I like about this is the transparency, right? Let's say, for example, this guy right here, he's the most copied Jepper Kirk bond. His earnings the last 2 years is 60%, right? Now that looks very good. But the good thing here is it's very transparent. You will know if the person is performing well or not. Right, so you can go to his statistics right here, right? The green ones, this represents every month of the year. So we're at November. He is already up 14.60% this November. So for November, he is gaining. But look at this. September and October, he was on the negative side. So he was losing. So this is how transparent copy trading is, right? There will be months that he will be red. There are months that he will be gaining, right? So this is the no guarantee part. Doesn't mean that he's performing well for this month. We cannot guarantee if he's gonna perform well for next month. It might be a red for December, might be red for January. No one knows. The risk is there, right? But you can see his performances the last few years, even 2018 performance. You can see, right? So you can gauge if this person is the right one for me to copy. That's how transparent eToro is. Okay, and there are more statistics here that you can see. So you can study a person before you copy him. Even down to the portfolio, you can see what are the things that he is investing in, so that you can see if you like the person's strategy. Let's say, for example, you don't like this person because he invests in Bitcoin and you think Bitcoin is risky. You can do that, right? If you want to go to that level. But basically, it's very transparent. If you think this is the guy for you, just click on copy, put in whatever amount that you want, and then that's it. He'll do the trade for you. Whatever he earns from the moment you copy, you will be earning also. If he loses from the moment you copy, then you will be losing also. That's the no guarantee part of stock market. Again, stock market is a risky place to invest in. But this is the rule of investing. The higher the risk, the higher the reward. If you're looking for higher reward investments, this is the place to be, right? But then again, risks are also still there. So I hope you understand that. The third, let's go to copy trading advantages. Right, here are the advantages of copy trading. Again, you have full control of your funds. Very important, especially for me that I need to, there are times that I need my funds to withdraw or stop the copying anytime. I can do that. I have full control of it. Very transparent from the people you want to copy down to their movements, and you can even communicate with them, right? And it's for free, right? The traditional way of getting fund managers is you have to pay fund managers, but here it's for free. You don't have to pay that person that you are copying. eToro does that for you. So if you like this kind of strategy, create an eToro account. Down at the video description, there is a link for creating an account in eToro. Please make sure to use that. That helps this channel a lot if you create an account using that link. The next strategy I am going to be sharing to you is the breakout trading. So this is kind of more complicated trading compared to the others. But then again, very easy to understand, especially for beginners. So I want to share this. Breakout trading. Right, a breakout trading is good for short to mid-term investment, right? For trading. Timing an asset after it breaks out from a resistance, right? I'm going to teach you what resistance is in a bit. These usually indicate a start of a new trend, usually an uptrend, meaning the stock is going to go up, and that's what makes you earn, right? So that's very important, catching an uptrend. The things that you need to know to for this strategy is resistance and volume. which I am going to be discussing in a bit. This is best for beginners who can watch the market regularly and have a fair amount of capital to spare. Because this is trading, you will need a fair amount to be earning, to get good earnings, right? What is a resistance, right? A resistance is a price point or area above the market where it shows heavy selling. Prices tend to go down at these resistances. A breakout is when prices go beyond that resistance. The resistance then tend to become a new support. So let me just go to the earlier slide that I gave you about support. Right, so let me go here. So this was the support that we were talking about earlier. Look at this area right here. You will see it's completely the opposite of support, where supports prices tend to go up and start to go up right there. But here is the resistance. Prices tend to go down when that area is hit. Basically, people think that it's already expensive and people start selling at that point. No one is buying already because the market thinks it's already expensive. Let me go back to the slide for resistance. So here's a clear diagram for resistance right here. This is for Jollibee again. I like to trade blue chips because these are basically fundamentally good companies. So those are the things I really like to trade. So here is a resistance, a very clear resistance, because when the prices rally at this point starts, prices tend to go down. When that area is hit again, prices start to go down and then go up. Once it hits, it starts to go down, right? And go down and go down. So that's a clear resistance right there. So breakout happens when the price, let's use the green one. When a price goes beyond that resistance, that's a breakout. Okay? So here's the example of a breakout. This is the same chart. This is the same resistances that I am showing you earlier. But at a certain point, the prices went over the resistance, right? This is the same chart as earlier. We're just moving onwards. And during that breakout, that should be your point of entry. And if you entered on the breakout, this is your gains already. So that's breakout trading for you, right? And this resistance will tend to become your support. So support meaning that is your risk. If ever the breakout fails and goes down, you just cut your losses at around this area below the support. So you have to cut loss. That's a different video, but basically I'm just teaching you the entry points right here. So here's an example of Dito, of a chart. This is Dito, one of the hottest stocks right now. So here's a resistance right here. Once this price was hit, prices tend to go down already. And then when it did a breakout, that should be your entry point, and you should be earning from this point already. So that's a good breakout entry right there. Okay, so that's a breakout strategy. Next is the pullback trading, right? Very good also. This works with breakout strategy because it starts a new trend going in an uptrend. And usually if the prices are already go very high, you don't want to change that. You want for it to do a pullback and buy it from there. So I'll explain to you what pullback trading is in a bit. And a pullback happens when an exaggerated move, after an exaggerated move of a stock. This is also called a correction, right? A correction of the movement so it can go back to its original trend, right? So a price, a stock has its movement right there, right? That should be its original movement, but sometimes there are exaggerated movements. So whenever an exaggerated movement happens, it will correct itself, do a pullback, and then continue with its trend. This is where you try to catch it, right? A correction of a movement so it can go back to its original trend. We enter the stock once the movement is done correcting. Usually, this is signaled by a bounce of the price action on the pullback. Right, here's a clear chart for that. So here is a breakout entry of Dito earlier, but if ever you failed to enter on a breakout, you can always wait for a pullback to happen. So here's the strong rally of Dito, it did a pullback right here, and here's the bounce that we're looking at. So that's usually the signal for you to buy, and if you bought the pullback, that is your gains right there. Okay, after a breakout, again, when a breakout happens, usually there is a change of trend. Okay, and that's already an uptrend. You want to catch an uptrend, not on the top, but on the pullback. Let it pull back and then give you a bounce. That means that it is already starting to go to its original trend again, and then that is where you enter. Okay, so I just want to go back a bit to breakouts. Right, so I also mentioned that the breakout, I mentioned this during a breakout. You need to understand, you need to know what volume is right here. Okay, volume is the amount of trade done during that day. So a breakout can fail. Okay, it can go beyond the resistance but go back down below the resistance. A good indicator to help you to know if that breakout is good is the volume, the amount of trades done during that breakout. And so here, I'm using this as an example because during the breakout, look at the volume right here. So considering the previous volume, this volume is quite significant. There's a big spike during that breakout, and if that happens, I mean that's a good breakout, and you will want to enter that. Okay. So another example is this breakout right here. Right. This is the breakout entry. Look at the volume during that breakout. This volume is significantly good, and a big spike compared to the other volume of the other days. Okay, so you have to it has to be backed up by good volume for a breakout to be considered good. All right, so going back to pullback trading. All right, so this is your pullback entry. All right, so now I've already shared to you the 5 strategies, the best strategies for beginners to start with, to understand. Right, I'll share to you a chart which is ditto, where all the strategies that I shared to you were shown in a chart. Okay, you can see all the strategies that I shared to you in this chart. That's why I consider this very helpful for newbies, except copy trading, since there's no copy trading here in the Philippine Stock Exchange. Copy trading can be done for the international market, but here's the breakout entry, and it's backed up by good volume right here. So if you entered here at this breakout, that's a gain for you already. Okay. Also, we mentioned earlier that after a breakout, the resistance tend to become the new support. And look at this pullback right here and the bounce from that previous resistance. That's the good entry, and that's another entry. We were given another entry with this chart. Okay. All right. Next is from the same chart. After the breakout entry, here is the pullback right here. Okay, pullback and the bounce. This is the pullback entry for you, and there's a good amount of volume on those on those bounces, so that's a very good indicator for you to enter. Okay, next is this support entry right here. Again, historically, where the price starts to go up, that is where you enter. So previously, the last bounce happened here, and the prices are now going to this bounce, and that should be your entry point also. And if you entered in this support, look at the price that you could have gained. Okay, if you I'm not sure if you can see it on the screen, but this is from 2 pesos and 50 centavos went up to 8 pesos. So that's almost quadruple your investment. So that's typically how the strategy works. I hope you learned a lot. Again, just a disclaimer, these technical analyses are never a guarantee that you will gain right away. So please put a strategy for your entries and your exit all the time, right? Due diligence is very important. If you have any questions of the things that I discussed, there are links in the video description for you to follow so that you will understand the strategy more. But this should be very helpful for you as a beginner. Again, if you want to create an account for eToro for copy trading, please use the link in the video description. That helps the channel a lot. That's it for today's video. And as always, let's get rich together. Bye, everyone.